Did you know that a single tax return can be audited for errors and discrepancies? A tax return can be audited for errors and discrepancies, resulting in costly fines and penalties. Audits can be triggered by a variety of factors, including suspicious activity and mismatched income. One of the most common reasons for a tax audit is a discrepancy in income reporting. This discrepancy can occur when an individual fails to report income from a side hustle or freelance work. For instance, if an individual earns $1,000 from a part-time job and fails to report it on their tax return, the IRS may flag this discrepancy and initiate an audit to investigate further. During an audit, the IRS will review the individual's tax return and supporting documentation. They will also interview the individual to clarify any discrepancies and determine the cause. In some cases, the IRS may find that the individual has intentionally misrepresented their income. If found guilty, the individual may face penalties and fines, including interest on the unpaid tax. To avoid this situation, it's essential to accurately report income and deductions on tax returns. This includes reporting income from all sources, including side hustles and freelance work. One way to ensure accurate reporting is to keep detailed records of income and expenses. This can include receipts, invoices, and bank statements, as well as records of business-related expenses. By maintaining accurate records, individuals can ensure that their tax returns are accurate and compliant. However, what happens when an individual has made a mistake on their tax return? But that's not the strangest part. The IRS may also impose penalties and fines for mistakes. The IRS may also impose penalties for late filing and payment, which can be costly. For example, if an individual fails to file their tax return on time, they may face a penalty of up to $500. Additionally, they may face interest on the unpaid tax, which can add up quickly. To avoid these penalties, it's essential to file tax returns on time and pay any owed taxes. However, what if an individual is struggling to pay their taxes? In this case, they may be eligible for an installment agreement, which allows them to pay taxes in installments. But that's not the only option. Individuals may also be eligible for a tax relief program. Tax relief programs, such as the Offer in Compromise, can help individuals reduce their tax debt. These programs are typically only available to individuals who are experiencing financial hardship. To qualify, individuals must demonstrate that they are unable to pay their tax debt in full. If approved, the individual will be required to make monthly payments towards their tax debt. However, what happens if an individual has unfiled tax returns from previous years? In this case, they may be required to file amended tax returns, also known as Form 1040X. This form is used to correct errors or omissions on a previously filed tax return.
For instance, if an individual failed to report income from a previous year, they may need to file an amended return.
But that's not the only option. Individuals may also be able to file for an extension. An extension allows individuals to delay filing their tax return until a later date. However, this extension is only available for a limited time, and individuals must file their return by the extended deadline. In some cases, individuals may be eligible for a waiver of the late filing penalty. This waiver is typically only available to individuals who are experiencing financial hardship or have a legitimate reason for filing late. To qualify, individuals must demonstrate that they are unable to file their tax return on time. If approved, the individual will be required to file their tax return as soon as possible.
In conclusion, tax returns can be complex and daunting, but with the right knowledge and preparation.
By accurately reporting income and deductions, maintaining accurate records, and taking advantage of available options, individuals can ensure that their tax returns are accurate and compliant, and avoid costly penalties and fines. If you found this information helpful, subscribe for more tax tips and financial advice. And don't forget to like and comment below with any questions or concerns you may have. Thanks for watching. Don't forget to subscribe for more tax tips and financial advice.